Hello everybody, Drew Brenner, your mortgage advisor here, coming to you with my weekly market update. Now I'm sure you've already heard that the Fed did decide to lower rates by 0.5% rather than the lower 0.25% last week at the Fed meeting. And some people have even gone so far as to write articles or have radio shows talking about how much 0.5% can reduce somebody's monthly payment on a mortgage. The only problem with that is that the federal funds rate does not directly affect mortgage rates at all. And if you can believe it, mortgage rates have actually gotten slightly worse since the Fed meeting. So the mortgage rates follow the bond market, and the bond market looks a lot more at what the Fed says after the meeting rather than how much they actually, increase or decrease the interest rates. And really what the Fed said is that they're planning on most likely lowering rates by a full 1% by the end of the year, which the market was already pricing in ahead of time. And so since there wasn't any new bond-friendly information, then it did not actually end up helping mortgage rates at all. And then we've actually had a small PPI inflation report that came out today that was a little stronger than expected. So all in, mortgage rates have actually gone up a little bit since the Fed meeting, unfortunately. But this does mean that we're finally on the downward trend as far as the Fed going down and helping the economy and hopefully stimulating that home buying market. And I think definitely after the election is done as well, because I have a lot of clients saying they're waiting until after the election, that it's going to start getting real busy for all of us. So for those of you that have weathered the storm over the last couple of years, I think good times are going to be upon us very soon. So on the week, mortgage rates went up by 0.08% to an average 30-year fixed of 6.2% by Mortgage News Daily Market Rate Survey. So last thing I want to talk about real quick is, as I'm sure you're probably aware, the conventional loan limit, so the amount someone can borrow before their loan becomes a jumbo loan, goes up every year in January. But here at the Guaranteed Rate family of companies, we're able to actually start locking in that higher conventional loan limit this week. So the new conventional loan limit we're going up to is $802,650, which means that a first-time home buyer doing 3% down can actually buy an $827,000 home with that minimum down payment. So it just blows my mind, because just a few years ago it was $417K, so it's almost doubled in the last, I believe it is 7 years. So awesome news for our home buyers. So if you've got a client that I can talk with about it, just give me a call. Number's 214-282-6387. All right, thanks a lot, guys, and have an awesome week.